Today I will be talking about Budget 2026. This budget was placed by the Finance Minister a few days ago, and I will be talking about the major or important changes in this budget, both in income tax as well as in GST. The first change that I will be talking about is the dates of filing of return. We were earlier filing returns on 31st of July, 31st of October, and 30th of November. A new date has been prescribed for the business houses which are not required to have their accounts audited. It could be an individual business, sole proprietorship, or it could be a trust where the deadline has been announced as 31st of August. There has been no change in the tax structure. This is very important. There has been neither any increase in the tax rates nor there has been any change in the tax slabs. So it remains constant as it was in the previous year. There has been no change in the corporate taxes as well. There is a change in the time period within which you can file a revised return. Earlier, after the due date is gone, you can file a belated return within 31st of December of that particular year. Now this has been extended up to the 31st of March of that year, meaning that you can now file either a belated return within 31st of March or a revised return within 31st of March. You will have to pay the fees for the late filing of return. There has been certain changes which have been made in the updated tax return. You are allowed in the present regime to file an updated return if you have missed out on any income and you want to declare the same. Within 48 months, you can file an updated return provided you pay additional amount as tax. There has been certain changes to this provision. Now, even if there is a loss and you are wanting to file an updated return which reduces the loss amount, then also you are allowed to file an updated return. If the SSC has received already a notice for reassessment, then you are not allowed to file an updated return as per the earlier law. But now this has also been allowed, subject to some additional tax that you have to pay in order to file your updated return. If you had an unexplained income, then the rate of taxation was 60%. This has now been reduced to 30%. There has been certain changes in the penalty structure. In some cases, penalty has been reframed as fees. There has been certain decriminalization of non-compliances. The maximum imprisonment term, which was earlier 7 years, have been reduced down to 2 years. And for repeated offences, it has now come down to 3 years. Therefore, a person cannot be imprisoned for income tax offences for more than 2 years, or in case of repeated offences, 3 years at the most. There has been some increase in the STT rates in respect of options and futures. If you are a resident and you are purchasing property of an NRI, then in the earlier law, you were required to obtain a TAN for the TDS purposes. Now the government has done away with the TAN number in respect of resident individuals, even if he's purchasing a property from NRI. Earlier, you were required to submit 15G or 15H forms for non-deduction of TDS to all the banks as well as to the mutual fund companies. Now, as per the new law, you can electronically submit your 15H or 15G form, and once you submit this, all the other mutual funds where you are having investments or in the banks where you are having investment, there will be no TDS. So this is a welcome change. For those of you who are having foreign assets and you have not disclosed the same, the government is giving a window of 6 months in which you can declare these assets, and it will give you immunity from any prosecution. If the asset is less than or equal to 1 crore, then you have to pay 30% tax on the asset plus an additional 30%. If the asset is less than or equal to 5 crores, then you are required to pay 1 lakh as the fees for this disclosure. Companies which are providing data center services in India has been given tax holidays up to 31st March 2047. In respect of transfer pricing also, there has been certain changes which have been made. If a particular transaction has been referred to the transfer pricing officer, that is a TPO, then the TPO must submit an order within 60 days of the last date prior to time limitation. Therefore, transfer pricing assessment will now be done in a more time-bound manner. Now let me talk about the changes that have been made in indirect taxation in the budget 2026. As you are aware, that GST laws gets changed as soon as the GST Council meetings and the pronouncements continue to happen throughout the year. Therefore, the government do not wait for budgets to make major changes in the GST law. However, there has been some changes that have been pronounced and which has significant effect in the GST laws of our country. One is the law relating to discounts. Now, if you are having to sell an article or even a service at a discounted price, then the law says that the GST will be charged on the discounted price, and the person who is receiving the service, he will be able to take ITC credit only up to the extent of the tax that has been charged on the reduced value of sales. In respect of discounts which have happened after the sale has been done, like volume discounts which are passed by a manufacturer to the agents or to their consignees, in which case the volume discounts happen much later than when the sale has taken place. Now, as per the existing law, you are required to have an agreement for such discounted rates given at a later date. Number two, every invoice has to be linked to the credit notes that you now want to give to the agents or suppliers or consignees. The new law now says that you do not have to have an agreement in order to pay the GST at a reduced rate after the discount, nor do you have to correlate the credit note with the invoices. So that is a big relief for the people who are making sales to their agents and subsequently giving a volume discount and having to correlate with all the invoices for the various suppliers to whom the services have been supplied to. The next major change is relating to obtaining refunds from the GST department. According to the existing law, 90% of your refunds in respect of zero rated supplies where you are allowed to claim input tax, and since the output is zero rated, you are not being able to claim that input tax credit and you are asking for a refund. In that case, 90% will be given back on a provisional basis within 7 days of the refund claim being acknowledged by the department. Now, this has also been extended to the GST refund which arises out of an inverted duty structure. That is where the output has a lower GST rate and the input is at a higher GST rate, which creates an inverted duty structure. In these cases also, 90% provisional refund will be made within 7 days of the acknowledgement of such claim by the department. I hope you had some important points to note down from the budget 2026, both in respect of direct tax as well as indirect tax. If you have any further clarifications, you can always write to me over email.